All right, and we're going. Cool. Let's jump into it. What are we at? 10:39 on the 8th of October. So, look, just sort of following up. Obviously, I don't do the Monday morning reviews and that because I do the weekend review, and by this time, 10, 11 o'clock, when I kind of do these morning sort of reviews, yeah, you're only a couple hours into it, so not really too much has sort of changed from the weekend, obviously. So this gives us a chance when we jump in on the Tuesdays to sort of see how this kind of stuff sort of played out. And, what we're sort of seeing here, just starting off with DXY, is that look, it hasn't sort of fired up, it hasn't sort of shot to the top side here, but it is still maintaining. So if we drag this a little bit further across now and that, and we say, just looking at just this last leg, because this is, of course, the NFP breakout, we had the big falling resistance through a bunch of horizontals and that, break, back tests, a whole bunch of these things. So just looking at this actual move through here, we're seeing it sort of dribble down, but it hasn't really sort of given up much at the moment. So let's just drag this on. So get this stuck on neg D. So let me turn this off. All thing here, and let's make it this color for now. A bit darker. Cool. All right. We can see a little bit of a low high, but almost to me, just even without sort of drawing these lines on, you can see that it's really just sort of almost flagging through this area, which, I mean, look, you got to consider all sides of it. One, it hasn't continued. Two, it's put in lower highs and lower lows technically, but it's still in the top 38% of this move. So you can tell that sort of like, whether these were stop losses being hit, whether these are people sort of, readjusting their books and going, you know what, actually, we're going to see some continued US dollar strength come through here. They haven't given up much of that profit. It's not like, okay, because remember, this was coming up here all through last week. So, you've got potential people that actually were probably buying it, not here. It's not just, that's the thing, there's so many different segments of the market. There's a short squeeze going through here. There's people actually sort of looking for some short-term or medium-term value buys down here. The failure of the rejection down here, and this is what I say as well, like, breakouts are good, but failed breakouts can be just as strong, if not stronger, indicators because we could see here that it tried to break out, and after a number of times of it not breaking out, look at the reaction that we've seen come from this afterwards. And of course, then you had the news that NFP and that to sort of support this last sort of leg and push back up here. So, you know what I mean? Like a failed breakout can be obviously a very big sort of mover or catalyst for the other direction. So, the fact that we've sort of broken out of this area here and it's really still in a bullish level, 38%, that's a bullish pullback. If we start to get down to the 68, 61% or 70, 78%, well, then you could be looking at a little bit of a failed breakout area. But till we get back down to here, you got to sort of assume that, there is potential for another leg. And if we look at this just in terms of this being a little flag, and we drag this across here, this takes us right up into our price target zone as well. So, you know what I mean? Again, not sort of saying that it's definitely going to go here, but we've got reason to sort of think. If we jump onto a higher time frame, jump onto the 4 hour, we can see that, up around this area, marketers valued this to sell it previously. So there's a good chance that if we do get up here, this is the move that we called on the weekend, the pullback, potentially to retest these levels down here, and then a fire up here. Look, again, it doesn't mean it's necessarily coming to where I've marked it here, 102.21 or something like this. This is just a drawn out area of where we've seen the market value it for buying, value it for buying, value it for selling. So, this is just an educated guess as to sort of where we might sort of be sort of coming back. But it's mainly just a course, whether, maybe this is all the pullback we get to the 38%. But, maybe we get the 50% pullback. That's, remains to be seen. But point being is that at the moment, it is still holding in this 38%. It's very choppy through the Monday here. We've got China back on board today. I think that'll sort of play into things a little bit. You know what I mean? So if this does break and if this does take out Friday's highs, this 102, 102.68, called 102.7 area, if we see a break above there, I think it's very logical that this would be the target that we'd be going to. I mean, we could see a little bit of a pushback here at 103. It's a round number. We've seen it sort of play smaller levels of, support and resistance. But, you can see how many times did the market try to break through 103, so 103.30, and, put in a high just here before it sort of succumbed to it, 103.50, which again is kind of a round number. It's not the big round number, but it's in that sort of, half break of a number. So this is very much the area which I'm looking to sort of look to target for US dollar strength should we get a break above here. So let's just put an alert. Put an alert here. So breaking Friday's NFP highs, target 103.20/50. I think that's a plausible trade there, and obviously, sort of like I'm not sort of trading, dig. This is the proxy of these sort of things. So and we sort of think, if it does start to break up here, how do we apply that to what we're trying to trade? And obviously, sort of like if you're on the other side of things, if you sort of like sort of short gold, which I am at the moment, short metals, short Aussie. These kind of things, this is what's been sort of playing out, and this is how you adapt this to what you're doing. I mean, if you want to do it directly, if you want to pretty much trade this chart, but not obviously trade DXY, you just trade Euro. Euro's what, 60% or something like this. And the chart is pretty much just a direct inverse relationship of this. So yeah, that's what I'm sort of looking for at the moment, to see if we can get above here, because you can see this is quite a solid. Look at this right through here. That's quite a solid little line where it's tried to go around, sold down, sold down, sold down, sold down, sold down. Look, eventually I do believe DXY is coming back, is destined to go sub 100. I do believe there's some work to be done down over here, but it doesn't mean that you can't sort of trade this part here to get your better levels to then sort of come back down here. And these kind of moves here, a move up here with DXY, could very easily see this with gold coming to 2600. I could see this with Aussie testing under 67. You know what I mean? Obviously, Aussie's not part of DXY, but it is US dollar strength across the board. Aussie dollar I'll get onto in a moment because we've got the RBA minutes coming out, 45 minutes. And obviously that makes Aussie a little bit different to some of these other sort of currencies because they are the sort of the most hawkish central bank. But end of the day, Aussie and RBA and the Australian dollar is a fairly weak currency overall. In comparison to a lot of these other sort of stuff, and particularly the US dollar. So what I mean by that is that sort of like, yeah, you could see, a setup where Aussie dollar is quite strong and it's a little bit more resilient. But if US dollar is being bought up across the board, it will overrun the majority of Aussie strength. So it won't mean that Aussie will necessarily be crushed, but it means that, it will sort of retard the move a little bit, if that kind of makes sense. So it means it's sort of like, if Aussie's got strong data, plus you got sort of strong US dollar buying, well, it means that Aussie will probably still get hit, but not hit as hard, if that makes sense. And then sort of like, obviously if the RBA goes dovish and you have US dollar strength, well, that's a double whack for it, and that's when Aussie will sort of, you get a bit of data out and Aussie will drop like 80 points or something like this. So, you know what I mean? At best, at the moment, the strong RBA or hawkish RBA is just sort of keeping Aussie elevated. But as I said, the market loves as a pastime to sell Aussie dollar. And if they're going to be buying US dollar, that's one of their sort of favorite things to do. So this is a very plausible play. If it does sort of come down over to these areas, again, I'll look for some sort of base because I do believe we possibly are going to be coming up to this 103 area at least. I think sort of the fact that it broke out of this sort of like falling resistance, the fact that it broke out to the top side of this range, I think does give it a little bit of a higher chance to go a little bit further. There are sort of moves that you can see with these range plays where you see something to this sort of effect and say it's come out this far and then it sort of would swing inversely out the side here. So that is a plausible idea. If this does come back down inside the range, that we could see a continuation and maybe a faster move to the downside here. But for the time being, for me, I think that it's probably got a little bit more damage to be done to the top side here. So I'll be looking to sort of play the sort of US dollar strength Um, till we get up to around this 103.20. And if I get some good levels to buy gold, then if I get some good levels to buy silver and buy Aussie, then I'll look to sort of probably swing the positions back over that side for it all. But we have to sort of see what this does here. We've got a tiny little gap down at the moment. You got to remember as well, we had daylight savings in Australia this week, so all the hours are sort of jumbled up in that. So yes, it's 10:49 now, but price action, you got to consider that it's kind of like 9:49. So the volume in the metals market, for instance, and everything won't be pumping in probably for another hour and a bit now. So yeah, we got to sort of see how that affects things, and it takes a little while to sort of calibrate what's happening because we're on a different time. Obviously, sort of the majority of US and Europe and that are asleep at the moment. But with China, with Japan, with all these sort of things. So yeah, I think at least a week or two to sort of really calibrate sort of when those new hours of sort of volume are going to be sort of hitting the market. But all things considered, if Aussies just sort of step back 1 hour or gone forward 1 hour with the daylight savings, that we could sort of see volume coming in generally what would have been 11, now 12 o'clock. So another hour and a bit. So I wouldn't really put too much stock around this sort of time and the price action that's happening at the moment. So in the short term, if we get a close up above 102.58, that's going to be an early indicator because we can see that this is on a 4 hour. How many times it's tried to be here, and it's a very, very solid line of where those candles have closed. Pretty much every single time. Down, bought up, down, bought up, down, down, bought up. So you get a close above here, that'll be an early indicator. Once this alert goes out and takes out that Friday NFP, I think that's the confirmation that we're going to be moving up to the top side. Inversely, if we do break below yesterday's lows, so below the 38%, then you look down to these other levels at the 102.25, 102.15, like they're pretty clear cut 10-point lines through here. And sort of see if we can sort of see a little bit of a reversal and bounce back up here. You do have sort of like turnaround Tuesday, but it didn't really do anything on the Monday, so it stayed elevated. So maybe that leans in the camp of more downside through there. But as I said, I'm still looking for this play here, another little bit of a push. All right, flip across to Aussie because of course we got Aussie back down to where we were talking about 61%. Look at this; it's pretty much right on the money there, which is an area that I've sort of been talking about for a little bit because remember, this is a sort of bit of a confluence here because of this last push up, we're down at the 161 retracement. So it has been absolutely hammered down through this zone here. Try to make sense of some sort of channel, well, it just keeps breaking to the low, to the low, to the low, to the low. We're back at the 61% retracement from September lows. So that's not the big low, is it? No, this is our big low down over here. So if we drag this, so many different fibs across here, probably need to change the colors of this a little bit. But if we drag this up here and we go for this whole move, I'm going to make this one a bit thicker. Oh, where we get up? We didn't get up there. We got up about 40 or so, about this level over here. So let's make you that one there. Whatever. As you can see, look, it's still in the 23% of that massive move. So very scrappy chart. I'll have to clean it up soon. However, whatever. This is the move from the lows, up, down, bang, bang. And I don't know why I put buy zone there. Would have been great to have picked it up. I remember sort of thinking I would have loved to have got some sub 64. Anyway, regardless, they're the lows when everything fell apart for 18 hours or whatever back in start of August. And if we take it to the highs through this move, we've got one leg, two legs, three legs. We're just in a pullback over here at the moment. This is something probably to take a little bit of note of, that we maybe come through a little bit of this sort of channel through here. Leave the side here. So this puts it on notice, definitely. But what I'm sort of looking at through here is the fact that where we currently are, 161 retracement of the last leg, so this leg through here, we're at the 618 of this bigger medium leg, but we're still, as I said, above the 38% of our major pullback. So to me, it kind of sort of makes me think, let me get rid of this for a moment, makes me think that sort of like, the game's not over. It's not like, oh, okay, Aussie's come back. I mean, we've been calling this pullback. We called this pullback through here. We got long here. We called this pullback through here, long here. I think we've got one more push through here. And I think that's why I had this sort of line over here that we could be seeing something that could come up and still put in a new high. Now, it really depends on a couple of factors. One, we obviously want to see US dollar get sold down a little bit more. And as I said, this is the thing, if we see DXY, if we see US dollar buying a little bit more, we may get a hit in our buy zones. As long as you stay above 66.50, then you are in the sense of moving up here. And you're on the fifth leg. So I don't know, I don't do enough of the sort of Elliott wave kind of stuff, but it'd be interesting to see how deep these sort of fifth legs come, because, you're buying, pull back, you're buying, pull back, you're buying. You've got to start to think the market's getting a little bit weaker around this area, but it may still have another attempt to get up into this zone over here to retest to see if we get that last leg to determine double top, higher high, lower high, to fully say that, okay, yep, that's it, the turnaround. Because remember, when you get these moves, they come like this. They'll go, move up, found resistance, pull back, find support, move up. Now this one can either go to the same high over here, and we get double high, double top, sorry, and then sort of it moves down like this, or we get what we did get, which is a continuation, moves to the top side, pulls back, retests these levels over here, and then we get this move here. And this move, same as this light here, is going to determine, are we going to get a double top, a higher high, or a lower high? And then we move down from that area like this. So that is what is going to come. Like, there is going to be this move through here. It's just you've got to sort of determine, is it going to get this strength, or this strength? Now, this is 90% of the time this will happen. Though, you got to remember, and I got absolutely smashed on this, that we had that kind of play over here. Moved up, came back down, and I put a lot of stock in this move, that we'd get a move up here, and it didn't. It went sideways, and then it broke down again. So I thought we were going to come up like this. I was going to use that to exit, to get out of a couple of the positions I was in, and I didn't, and I got smashed. So you got to consider all sides of this stuff. Whoops, let's get this chart cleaned up a bit. But in general trading, more often than not, you'll see these flows, and you'll see come back here, find support, whether it comes down here to say 67, whether it sort of bounces off this 61% and 618, that remains to be seen. But as I said, this is the first buy zone that I've got down over here, because even if we do bounce from this area down here, that's 67.20 off a 69.40 odd high, 220 point pullback. It's still in the 38% retracement of this major move, which, as we know, is a bullish momentum pullback. So if it finds support around this area, there's a good chance that buyers are still happy to sort of keep this thing rolling on. Remember, this move through here, from here to here, this came to the 38%, and I called it at the time, because if we go back here, excuse me, we look at this move, and it came back to the 38%. That's what I'm saying. That's sort of like 38% is very much bullish momentum. So it means that sort of like, if we do get a little bit of a deeper pullback, which I would like to do, I would like to see US dollar continue with a little bit of strength, smack Aussie a little bit more, give me a chance to sort of like, buy it around, say, 66.90. Remember, the 90s are always that level that we like. 67.20, 66.90, these kind of levels through here, still in bullish momentum territory, that could very much sort of give us a nice trade of a couple of hundred points potentially to run out the end of the year. If DXY, if US dollar doesn't decide to just keep on careening to the top side. If it does, well, unfortunately, Aussie is probably more destined to revisit the 66 level, which is quite a significant drop off down here. And at the moment, this angle is quite steep. So, you know what I mean? That can't continue As I said, it's not that it won't continue, it's just things can't continue on a straight down line for too long. But till we get back above this line over here, I think that sort of like, there's definitely a chance for a potential sort of setup like this to sort of come down into these buy zones. And remember, this isn't the exact level. It could come down here, could come all the way down here. I don't know. But what I'm looking for is a sort of a move here, then multiple attempts for it to break down here, maybe a little fake out, come up here, test this, then break out, and then start to move up like that. So I do want to get long on Aussie, but I'm not going to sort of be packing the whatever the cart or whatever you want. I'm not going too heavy too early with this because I think there's going to be plenty of opportunities around the pullback area. Remember this, like look at this over here. I've got to clean this chart up so you can see stuff better. But see here, where it pulled back from this level over here, how many times to go up and down, up and down, up and down, up and down, a little spike down here, and then moves back up. So generally, these things will turn around with a bunch of up and down, up and down, up and downs before it starts to actually reverse back up to the other direction. So I don't think you need to be the first into it. I don't think we're going to get something now and go up here unless, you know, I don't know, inflation sort of like, sort of inflation CPI goes back up. You know what I mean? Get a high CPI print, maybe that'll happen. And then, because I remember, look, the thing that's keeping Aussie elevated is the fact that they've got a hawkish central bank. But that's again, it's only sort of while you got the data to support it, while we've still got these kind of crucial kind of levels. So look, I do think that Aussie will sort of have this next run up here, but I think there's better levels to buy it from down here. Coming into these levels, the 618, the 1618, coming here, it's getting trickier to short these things. Like I've been short all the way through here, I even closed a bunch of them overnight. Um, to me, I think it's getting a little bit risky around here. And I think, particularly as I said, with in 29 minutes now, we got the RBA minutes. I think you could see a little bit of a push up over here, come up to 67.90. You know what I mean? As I said, that little direction that I've drawn here isn't necessarily, the level it's going to go to. Maybe it comes up here and then pushes back down and does this. Who knows? But the thing is, I think at the moment, I'm completely flat on Aussie. I think that there's a little bit of stuffing around to be done down here, and that's what I'll be looking for, this kind of thing. And then once we start to break through this pullback level through here, like we did on this pullback level through here, this is what I'm saying. See how we sort of like, it was set up this nice little pullback, and down, bang, back, up and down, up and down. Once we broke through that pullback level, yes, we did it here with a little tricky thing here before it got smashed. But once we go through here, back test of the breakout level, see how we broke through this falling resistance? We broke out, we back tested, took out that high, 67.40, was this 67.40 level? That's the big sort of move through here. So yeah, I think there's time to build a thing. I'm not sort of looking to get really too heavy onto the Aussie longs till we see US dollar calm down, till we see it hit a plausible price target where we could say that people are going to start to sort of take their profits. They're going to say, look, US dollar, they're still cutting, Aussie's still in the hike camp. And then I'll start to sort of load up some longs. But at the moment, I think shorts at the moment are a little bit risky because we have come down nearly 200 points. So I think there are short opportunities. If it does move up here, I'll probably look to short a little bit more. But again, I'm not looking for necessary moves down over here. I'm looking for sort of something around this zone over here where I can start to buy it. 66.90 would be great. If I could buy at 66.90, I'd take a pretty good position through here and then sort of look to see this move back up towards 69. I think that's got a good risk reward on it. All right, so yeah, here and now I'm holding flat on Aussie. Potentially we get some sort of hawkish comments. A push up into this zone over here. If we get a push up into, 67, 80s, I'll probably look to short a little bit, and play this zone just for a little bit of back and forth through here. I don't think we're going to get the comments that are going to push us right back up here. I think what's going to get Aussie back up here is a sell off on DXY. That's my feeling. All right, onto gold, because gold is all over the shop here. So let's pop it into another chart, make it a little bit cleaner here. This is the kind of thing I saw somebody commenting, not commenting, but sort of drawing this up, This is the kind of thing that I like to see for a potential short-term high with gold. Um, we've seen lower highs coming in here. We've got a nice baseline ledge through the top over here. So, maybe put this wherever. Call this the zone. This to me is kind of like what I want to see for a bit of a pullback with gold. We're getting the lower highs, so it's failing to sort of continue as of now. You could say, oh, wait, let's make it matched up with this. I've seen people comment on this kind of thing to sort of say, look, there is a bit of a triangle. Yes, there is a bit of a triangle going through there. But this move here, to me, apart from the fact that we're out the outside of this big falling resistance, let's see if I can find it quickly on here. Because it was when we went down underneath 2400. Yep, this point over here. This is how I sort of have been referencing this point. So if you look at this section through here, we've got a nice baseline, lower highs, dribble, dribble, and then a push and a solid push down underneath. This is what I'm looking for a top of that. I think the idea that we're going to get some screamer top like this, which was that massive one. Remember when I reference this all the time, when we sort of went 50 bucks or something in 50, 60 bucks in 15 minutes or so. It was a Monday morning. Yeah, see, Monday morning, 9 o'clock. So remember these things. Yeah, I mean, these are the crucial things to remember. This is a big screamer top, right? So this just went crazy, all the way up here. Gold spreads are generally, I think, around what, 50, like 0.5 or something, zero point 0.3, 0.5, these kind of things. The spread got up to 5, like a $5 spread on gold is massive. But this is like, okay, stop city, bang, find the stops, flies up to the top. I think we've sort of bashed up above the highs enough now to sort of think that, look, you know what? There's no big golden well of stops up here. I mean, maybe above, 2690, you might find some just because it's been up and down, up and down. Maybe there are some people that are shorting here and saying, look, as long as it doesn't make an all new high, all new time high, then I'll be fine. But for me, what I'm looking at is the fact that we're putting in these lower highs. It's failing to continue. We're potentially seeing some US dollar strength come through here. We've got a nice ledge. I think this is a great little level for us to sort of get down underneath. And I think this is why I'm sort of playing gold to the sort of short side through here. I just don't think this is like a setup that's sort of screaming to me we're going a bunch high. Look, it could, definitely. I mean, if it moves up around these levels over here, we could see a little bit more of a move higher. Look, put this over here and say, look, you get above, as an earlier indicator, if you get above, say, 75, maybe. But you can see even this one here, it shot up pretty hard. It came up to, and that was after NFP, remember? Came up here really hard and bang, smacked on the nose. And it is really just trading sideways at the moment. It's waiting, I guess, maybe partly on what's going to be happening with the Middle East. I think US dollar, I've been saying, I think US dollar is the bigger driver than Middle East and that at the moment. Um, but we'll see what happens with it all. I mean, realistically, it is just consolidating. You can say that yes, it's building a ledge. You could say yes, it's a triangle to break higher. But at the moment, it's just sideways. You can see this. You know what I mean? Like, so you got higher highs technically. You got some lower lows. It is coming into this sort of triangle thing through here. But I think if we get down underneath 2630, look, I don't think it's necessarily going to be coming down here. But I do think that we could potentially be seeing a little bit of a further pullback. As I said, areas that I'm interested in, 2600 through this area through here, top of that wick, big round number. And then look, if you get down underneath that, then you're looking at say 25.59. I mean, think about it, like how bullish and how strong gold has been. We never got the retest of that 25.30 consolidation area through here. We never got that retest through this part here. But look at this, it's just been up, 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 up. Like it's been massive this year. So, the idea that sort of like, you may see a little bit of a pullback, that's not sort of, unheard of. I mean, if we try to find where we would drag this fib from, there's a little fib's gone here. So, you know, I mean, it's hard. Like, you could say from this one here, if you want to do a smaller one, because there's a bit of a deep pullback here where we go from 95. There's a $50 pullback, so you could say that's the last real surge up to the top side. Get back down to the 61 of that. That lines up pretty good with that 2600 line. I'll make this a little bit smaller. But, say if we did a bigger one, so, I mean, look, it's hard to sort of where would you pick these lows, but let's say from this, lower support that we called, and even though you had these deep pullbacks, and you say you move through here, this is still super, super bullish. Even if you do come back to this level here, which we're sort of talking about, 2600, come back to 2600, you're still at the 23% retracement of this move going back to, oh, geez, that was only in, was that only June? Geez, wow, gold has been absolutely ripping, hasn't it? You know what I mean? Like, you got to think there's so much profit up here. And look, I do think gold is going higher. But again, these things don't mean that it can't sort of have a little bit of fluctuation at the same time. So fix that alarm. So, to me, it sort of feels like, there's a chance that we could see a little bit of cooling off here. If we have a look on the daily, how's it look? And this is what I mean. So the daily here, it's got a nice little ledge here. I think these are the kind of levels that, you want to be looking at. 2600, 2550. They're the levels. I mean, that's still super bullish. 38% is right back down here. 2530, as I said, this was that sort of thing. We're sideways in this little range for a bit here. And we never got that pullback. We never got the retest. Look at the break here. And that just went and pulled back and blah, blah, but it never came back and retested this. So like Aussie with 66.40 a couple of weeks or months ago, whenever it was, and we got that retest eventually. I said it was going to come, and it came, got the retest, and then bang, exploded on again. So there's no reason why you can't see a pullback to here and then go, whoop, or down here, or even down here to go. These are all still plausible things. And remember, in the whole scheme of things, this still keeps you in 38% of the move just from June, not to mention the full move. You know what I mean? Like in the super grand scheme of things, I mean, where's that fib gone? I'm going to drag this down here. I mean, technically you go back to 2430 and you're only at the 23%. So you've got to remember, gold is super bullish and has been for a while. It's overshooting some of these things here. There's no guarantee that this thing, I mean, there's no guarantee either side. There's no guarantees in anything that these things. It's just educated guesses with it all. But, you know what I mean? As I said, if it does come back down here, it'll shake a couple of people. But you've got to remember, it's still super, super bullish for these sort of things. 23% is the top of that big range that we had going back, sort of set up from April this year. So where's January down here? I mean, look, this is where we were at the start of the year, sub 2000, and now we're at sort of nearly 2700. You know what I mean? Like, I think the risk is a bit more to sort of that we do see a little bit of a pullback here before a continuation, a healthy sort of exchange of sort of longs and shorts. Well, I mean, profits and whatever. But yeah, I'm sort of thinking that we do see a little bit of a pullback moving forward here. Actually, sorry, let's just jump back on that for 1 second and say that's the big picture. In the short, what are we looking at? Let's jump on the other chart actually. Um, Look, it's not respecting anything really through here. Would have thought maybe this level, nah, didn't respect that. Would have thought maybe this triangle, let's widen it out, I suppose. And you can say over here, and then you can come up to over here. This is the thing, you're making extra allowances for things as they chop through, isn't generally a good sign. You know what I mean? You're like, oh, but it broke through that one, but it came back in. Well, this is just, stopping people out, stopping people out. It's not respecting the chart. There's no sort of direction, and there's no sort. That means it's a bit of a free for all. You know what I mean? Like it's not a like I can't be bothered finding it right now because it'll take me a little bit. But there's periods where you see these sell downs, and it's through a channel, and it's just so like to the point, bang, 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 all the way down. It's a very sort of well orchestrated and very controlled sell down. At the moment, this is moving up, but this is all over the shop. I mean, look at all these lines everywhere. I mean, that's my charting, of course, but you know what I mean? It is not, there's no easy sort of read of what this is doing at the moment. There's no sort of like, if anybody tells you, yeah, it's setting up like this, I say, well, it's not. Like, I mean, there's no channels, I mean, all the sell downs, they're respecting these other levels that we got marked out, but then it's shooting back up, taking out the highs, coming back down. You know what I mean? This is really clearing the book. As I said, I still think that as I said, with the larger time frames, it's probably more likely to see a little bit of a drop off, but you just got to make sure that these guys at these sort of levels aren't sort of buying it up each time. And then we can sort of look for a little bit sort of a move down. So let's sort of drag this across here because, as I said, look, it's just coming underneath it each time. I think, look, short term, let's get rid of this. Look, if you want to trade it intraday, I think these are your levels. That's your level to get above 60, and then below 30. Look, it's a massive range, $30 range. Like, you can make a lot in the $30 range. But it's not an easy trade for gold at the moment. Silver, as I said yesterday, sort of these were the lines that I was looking at, and I said, look, if you want to try and buy it, that's probably your level. It absolutely just got crushed through there. So let's get that one off there. Obviously, it didn't play its part. This hasn't played its part. Or maybe it has, and it's broken through. As we've seen it break through here, so let's keep that other one on there. And we see retest, sell back down, retest, sell back down. So look, the horizontals I think are more important here, and I think sort of like below yesterday's low, 31.35. I think we could sort of see a bit of a move back down a little bit further. We are seeing a little bit of a double top here. It's come up in this zone a couple of times. On the higher time frames, you can see it a bit better. How many times it's been just so crucial for it to try and close above here. You know what I mean? Here's two big wicks. This wick even here was like, imagine anybody short through here. They sort of like short 12-year highs. Yep, cool, I got short. Well, what have they done? They've jammed it out of nowhere. This is the thing with metals, with gold and silver yesterday or on Friday. Sorry, they came out of nowhere. Like that reversal was just insane. I mean, I was short. I got out in this move down here. I had a look on the weekend, and it turns out it had gone all the way. The bigger move was massive. I mean, look at this. It's like 31. It's like $2.50 move or whatever, or a buck and a half move. So it was about 4 or 5% or something. It was massive move off the lows there. But again, that's just taken out anybody that got short at the 12-year highs and put their stops just above it. Bang, they're all out. Boom, good on them. And we've seen bang comes down after and after and after. So I think sort of certainly, again, I think metals are a little bit more sort of set for a downside move. Let's clear a few of these up. And let's get rid of these. I think that sort of potentially we're looking at something. I would like to sort of give it another shot, but maybe down the bottom side of this area through here. Let's call this breakout box here. So I think sort of potentially more down this zone over here. I think this is where I'd like to give it a shot again, to sort of see a bit of a range play through here. Obviously, if you get a close above, 32.50, 4 hour or above, well, yeah, you're looking good. But as I said, a moment ago, I think gold's got a little bit of cooling. I think DXY's got a little bit of a push. I think sort of silver's going to follow suit with gold. That's just how I'm seeing it. It's how I'm playing it at the moment. I think there's more chance you could see how violently they want to sell it down. Look at the sell downs from these areas. They're not stuffing around. Once it gets up here, they just dump half their book on it. So look, again, if we can see that whoever's selling these lots are depleted and we see a close above 32.40, 32.50, get a close up here, it means these people, the segments of the market that are selling it down from there, are either out of ammo or happy to let it sell a little bit higher. Or they've bought enough down here and they're happy to sort of sell it here, buy it here, whatever. That's the key that you're going higher. Close at 32.50. But I think for the moment, there's more risk of it sort of coming back down to 31. And remember, 31 is still very high. I mean, again, we talk about fibs all the time. Look at the fib through here. I guess you can update this to a new high now. But, if this comes back down to our supports, this is where the area I just mentioned that we're looking for it potentially to say range through or to even sort of have another shot to buy. That's still 38%. And 38%, I keep repeating myself, is the 38% is a very bullish sort of level if it can find some support from here and then drag up here. So I think this is probably the best case scenario for silver, is that it consolidates this period through here. I don't think we're necessarily just going to see a rocket and shoot up over here. It's broken this channel. It's retested the underside of it a number of times. I think that needs to be respected. Be looking for some buys around 31 and see if it can sort of make a little range out of here. If it breaks underneath 31, well, you're going to be looking back down over these levels over here, say 29, 29.80s, these kind of levels. But we'll get to that as it gets to it. For now, it's just up in this top area consolidating. Talking about consolidating, we've got copper, which really is just not giving up much at all. I had this little price target down here when we sort of came up the top over here, and I said, look, the gaps are going to close. I got out around here or something like this. I thought it was a pretty good trade. It's a nice little trade, but of course, then you see bang down here. Didn't quite get to the price target anyway, so we can take him out for now. Look, it's really just consolidating again with the fibs. This is right up around the 23%. This is very bullish. This is an area that we had marked out. We said that, look, this is going to be tough to get through. It has been tough. It tried to get through there, 1, 2, 3 times. It's sort of pushed back down here at the moment. Look, that's the line in the sand for it. Above, say 470 or so, 473 and change, that kind of thing. That's the continuation move up over there. But with other things, I do think that if the longer it sort of sits around here with lower highs coming in, the more chance you're going to see a little bit of a dribble down. I guess we could kind of take this high and this high here now and sort of say, look, this could potentially be something that we could work with. See if it sort of comes up here. If it moves up here and rejects from this level again, we've got this little horizontal through here, there's potential falling resistance, and then takes out these lows, then this is the kind of thing that I'd be looking for. I mean, I'd love to buy copper back down at 430. I don't necessarily think I'm going to get it, but if we can get back down to the 38, maybe have a little bit of a shot here. But back down around this 50% for 38. What did I say? Yeah, 446 or so. There's 38% here. 438 as a price for copper. I'd like to have a bit of a buy around this zone over here. So something to this effect. But like I showed before, with Aussie, you've got your pullback. Really, nothing happens till we deplete this line. Like we see that whoever's selling this down isn't doing it anymore, and we can see the flows and the action are moving back up to the top side. So I think, again, like with all the metals, I think there's a little bit of cooling to come. In saying that, I'm looking at DXY, and it's pushing in some sort of early sort of session lows. So I'll finish this off quickly, and we've just got China. So we're seeing China, and it had its completion. So 2 seconds. All right, and as I said, just finish this off quickly. So with one, whoops, not that one. Oh. With the one here, we had that inverted head and shoulders. We had the measured move came out to the top side here. We could see that was completed. You know what I mean? Market said, yep, that's enough for us. Okay, we'll push it back here. And we called this. I mean, these are the things that we said, look, if it does break up here, we got the thing, we're going to see a little bit of a pullback to this level. It's come a little bit deeper, and it's actually broken through and actually, as of right now, done a little bit of a retest here. So we'll have to sort of see, because I think China's back from Golden Week this week. So we've got to see how that sort of impacts the markets a little bit. But yeah, we'd see the break of this channel through here. And this is what I was saying before, like with all those other things. Once you break that channel, you got to sort of be aware that that really shifts things to the change of direction. Doesn't mean we're necessarily coming back up here, but it needs to be respected a little bit. So at the moment, we're seeing a bit of a back test to the top side of this channel. If this does start to rally, flip back up above this level here, I'm just going to put this just on alert for continuation. This is, again, another thing that shows me that sort of like if we sort of see a push back up here and we see a push across here, it's going to weigh on the Aussie. It's going to sort of show a little bit more US dollar strength across the board, not just DXY, because remember, DXY is very heavily sort of dictated by the euro as well. But this is obviously a little bit more closer to home with the Aussie to sort of see how it's impacting sort of China. So if we see this flip and push up along here, particularly if we take out those highs, then you got to respect the idea that we're probably going to see a bit more of a medium-term continuation back up to maybe these sort of 715 levels or 714, 715, these levels over here. Get above there,
well, okay, then that's the full squeeze is on. Look, alternatively, it just dribbles and just comes back down over here. But the fact that it broke out and broke out quite violently, I think is a good excuse or a good chance that we may see a little bit further of a push and a flip back up to the top side over here. All right, so flip across quickly because they've got RBA minutes coming out in what, 2 minutes. As I said, minutes coming out. We also got job confidence. We got job advertisements. Sorry, business confidence, and that is pretty much it for news in terms of today. One to watch out for tomorrow is the RBNZ rate decision. So we will see how that impacts things. All right, so that's pretty much it from me, and we'll sort of check in, see how the market's going tomorrow. That's it from me.